Well, we're back, and let's tackle some requests. The previous section I only handled 4. I hope I can do more than now, but that was important. The Nasdaq was important, and the gold chart was very, very important, just to show us maybe what can happen in this market. Well, let's have a look at Hulisani. And Florida is asking about Hulisani, and Hulisani is a company that is surprisingly doing well on the charts. I know it's a recovery stock. And what do we see here? I like this rounding bottom, Florida. That makes me positive. But I'm using that 40-week moving average again, because remember the lesson of the previous show was, if the tide goes out, everything goes down. So maybe you'll be surprised. If the tide goes out, it will also surprise you to the downside. But where's the big level? The big level is this R4.45. Now, I know it's 5.88, and I know that you want to buy it. Now, first of all, the positive thing about this chart is the following. That resistance line turned into a support. Just want to show you there. There you are. There you are. I like that. And that line was sitting at 5.27. Now, you've got two options. You can either say to yourself, okay, I like this chart because what do I see? I see a low, a higher low, a higher low, a higher low, and I'm seeing a higher high. So you can either chase the momentum, make use of a stop loss, and I'm going to use this 40-week moving average as my stop loss, 4.37. And you will say to yourself, there's big overhang resistance around here. That is that 7 Rand level. Or you say to yourself, markets are pulling back. And this is quite interesting. I've seen that over the years. If I want to buy something, the markets pulls back, I'm keen to sit on my hands a little bit and wait for the markets to do their correction. And then if I like the share, I buy it. Sometimes what happens is I buy too early and the market pulls back. And then if I see my share goes against the trend, I know that that is one of the star performances of the future. So yeah, there you are, Florida. You can look at that. There's a beautiful rounding bottom here. It looks nice. I like the higher lows. That's positive to me. But the only thing what I don't like is that the market wants to correct. You know, our index, can you believe it, is almost, can you believe it, 7,000 points from the top. And the S&P 500 is about 400 points from the top. And the Nasdaq, almost 2,000 points from the top. That makes me a little bit nervous. So let's carry on and see what we can tackle next. Paul is asking about FedEx. Now, this is a very interesting question or request. And the reason why I'm saying that, you know, FedEx, they transfer parcels across the world. And usually if there is a demand in parcels, the company will do and the share price will do well. Now, what happened in 2020? When everything was just selling off, it made a beautiful double bottom there. There you can see the double bottom there right at the bottom. And it triggered above that level of $165. And where did it go to? It went all the way up to 320. And right at the top, we saw a beautiful rising wedge. The rising wedge warned the investors. I said, guys, be a little bit careful. We have rallied a little bit too hard. Sold off. It triggered this 40-week moving average into a resistance. It came back. Look at that. Another technical goodbye kiss, negative one. And since then, the share price is drifting lower. And what do we see? Apart from this rising wedge, there was another formation. I want to show you. It warned the investors. There you are. I just want to take that one away there. Just give me a second. There you are. Right at the top. It was a tiny head and shoulder formation. There you are. There you can see. Tiny head and shoulder formation. Technical goodbye kiss. And for me personally, I believe that the market is telling us something, especially FedEx. FedEx is telling us that suddenly the world is not that keen on sending parcels around the world. Now, I know there's plenty courier guys. FedEx is one of those well-known branded names in the world. And for me, where will I get happy? And same thing. Remember, I always use simple technical analysis. Now, if I can make a living out of simple technical analysis over many years and just look at price action and use my trend lines and use the candlesticks, I'm sure you can also be successful. Now, there's the big thing. Trend line is down. And for me, I will only get this trend line into a support above 205.50. Then I will buy. Otherwise, and I will say to myself, if I buy, What you do get in a bear market is very interesting. And remember, we are already 20% from 320 to 200, it's more than 20%. What you do get in a bear market, you get the sell-off, then you get the rapid retracement, and you get the sell-off again, a rapid retracement, and that is typical of a bear market. It tends to give you the spurt, you think, okay, I'm all right, don't lock in your profit, and it pulls back immediately. So just watch FedEx. That maybe tells you that the economy in the world is maybe slowing a little bit more than what we anticipated. Mil is looking at Pioneer Natural Resources. Now, Mil, this chart looks beautiful to me. Nothing wrong. I mean, in 2020, can you believe it? It was below $60. It's now trading at $260. And because I'm sure this is a commodity company of natural resources, let's just draw in that trend line. Everybody is 100%. Nothing is wrong. Nothing can go wrong. That's what everybody believes in. 40-week moving average is still beautifully to the top. We've got an ascending channel. Always remember, when you trade an ascending channel, it's always better to buy when it pulls back to the support line. And where are we? We're in the middle of this ascending channel, so it's not a place to buy. And what I don't like, and we've seen a previous chart today, and I cannot remember the name. Look what I see here. In this ascending channel, I see a beautiful head and shoulder formation. And as I said with that chart, beautiful technical analysis 101. Let's have a look, and you will see if this neckline breaks. I'll give you the level now of the neckline. And there you are. If it breaks, it will take you to this support line. And where's the neckline? The neckline is sitting at 233.62. And if it breaks, it can go back all the way down to 204. Something else. If you look at interest rate cycles, usually the first interest rate hikes do not bother any investor. But then suddenly you get to a point where it starts to bother investors, and then it turns around. So we're not yet there. I don't like this chart, head and shoulder, and I'll be happy, but I'll only buy it at this line. And the big line for me is this 40-week moving average. Why it's above 40-week moving average, I like it. But where's that level? That level is sitting at 201.26. So I will sit on my hands, Mil. I'll first wait for this head and shoulder formation. I will not chase the momentum, but I mean, you can do so. As many investors, they've learned a wonderful lesson over the last 2 years. They just buy and it runs. So if you do want to do that above 257.50, you just buy and it runs, and use this neckline as a stop loss of 231.40 just to protect your capital, and maybe it surprise you. And let's hope that it can go even higher to maybe 275 or even 280 to give you a nice profit in your bank. Scully is asking about Logitech International. Interesting, again, another logistical company. And what do we see here? Same thing, beautiful rally to the top. It started to give us lower highs, and I mean the chart rallied all the way from 220. That was from 2020, from $36 to $130, and now it's trading at 64. So for me, it's quite simple. The momentum is to the downside. We're below the 40-week moving average, so there's no chance of chasing the stock. Let it play out. Let it do this, and that's what I sometimes like to look at the chart. If it starts to fall, and it says, like in this case, it fell from 49 to 31. Look at it. It used many months before it started breaking above the 40-week moving average. And then it was a slow grind, drop below, and even then it started to go. So for me, it's early days here. I will not chase it. But of course, I know the traders and I know the investors. They like to chase shares, and let's just draw that line in there. There you are. For me, the trend line is still purely to the downside. Let's just have a look here. And for me, where's the trend line? And remember, this is a trading view. This is not an investment view, although it's a weekly chart. I need to see the share. For me personally, I need to see the share above 77.60, and we're trading at 64 to make me positive, so that I know that there's maybe a higher high in place. But for me, where's the trend line? This trend line will only break above 67.72. And this is for a trading view. Make use of a stop loss of 65.05, and then it can maybe go to 71.50 and even 78.02. So for me, I'm not keen on this chart. I mean, the momentum is down. I think maybe just sit on your hands for a while. Freddie, you're a clever man. Ask about Bidvest, and of course, Bidvest is one of the big components in the South African economy. I mean, if Bidvest does well, it just shows you that the economy in South Africa is doing well. But on the other hand, if I look at this, for me, tiny little double top, but I must say, nothing is wrong with this chart, Freddie. There's the momentum. It's still beautifully to the top. We can see there is an ascending channel. Most of the investors will just say, no, Frans, everything is 100% fine here. There you are. Look at that. I mean, it bounced against this resistance line, but every time it went up. But can you believe it? Very interesting again. Look at that. There's a head and shoulder formation, maybe on the brew here. I'm a little bit worried. I don't like it. I've seen now, I mean, we did, I think, 10 or 12 charts. But we've seen, I think, 3 charts now where we're in the ascending channel. We're above the 40-week moving average. Everything looks beautiful, but we're sitting on a head and shoulder formation at the top. I mean, I've got a lot to show my clients because I'm going to pick all these shares and I'm going to let them know. I mean, this is the neckline. The neckline is at 211.90. And below 211.90, it can easily go to this 40-week moving average, 198.70. So for me, unfortunately, not a buy. Unless it bounces off this line at 192, find support, then you can buy it, but then make use of a stop loss of 175.38, and maybe it can crawl back all the way back to that 240 level. But I'm a little bit nervous. I don't like the show because we've seen now 3 charts warning us of head and shoulders in ascending channels, not a good sign. Well, thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.